Now, Chairman of CAFRAL, for this opportunity, sir. First of all, I have to convey my finest appreciation that CAFRAL, under your very dynamic leadership, has built not just a very good and very effective policy research platform, but even more abundantly, an interaction, an interchange of ideas of how to change management, how to get our Indian banking sector, public and private, into its next orbit of change. As we all know that Indian banking, despite all its strengths, is going through a transformational change, not just in risk management, but in terms of many aspects of what needs to be done to create what I would like to believe is a tectonic shift in Indian banking, because Indian banks are predominant financiers of the Indian industry. We don't have a venture capital industry which is very profound. We don't have a private equity industry which is very well established. We have a very limited scope of raising equity other than through equity markets, as in IPOs, etc. But the fact of the matter is that the biggest sounding board, the basket of growth, is really being driven by the Indian banking sector. And despite all that we read, all that we believe, the fact of the matter is that the resilience demonstrated by Indian banking has been absolutely rock solid. We have hiccups with every cycle, with political changes. Earlier it used to be driven by seasonality and cyclical movements of commodities. Nowadays it's driven by paradigm shifts happening when politics takes over. But the point that Mr. Gopalakrishnan advised me to address is about change management in banking. I just completed 35 years in Indian banking. I have completed within that 17 years as an entrepreneur within Indian banking. And I can tell you there are a few things I would like to share with you in the context of this very important subject, which I believe that private public sector banks should share on a very common platform. And CAFRAL, Mr. Gopalakrishna, has given us this opportunity. I would like to believe, number one, that in change management, there has to be change energy. First and foremost, it has to be driven by believing and creating positive energy. What do I mean by that? I mean by that we have to look at our ecosystem and don't only believe that there are skeletons in our system, there's negativity in our system, that we must psychologically start questioning our system and try to see in change management that systems can change, paradigms can happen, there can be tectonic shifts in the plates of Indian banking if we start believing that there is goodness in terms of the actions being taken. This is a little high level point, but I want to come to the more significant points, which in my judgment, in my young bank, having been working in a large bank, two large banks, and having set up a joint venture with a Dutch bank, and then got into like a brand new banking platform like Yes Bank last 12 years. In change management, seriously, what really helps, even if you move from one shift to another, is the ability to visualize the change. I personally believe visualizing the change really makes a very big difference. Naturally, when you visualize, the next step is to strategize the change. How will you visualize? How will you strategize? And then you get to the brass tacks of how are you going to actualize the change. So the headline point is visualize, strategize, and actualize your game plan for any shift in thinking which is going through a banking institution, which is an established institution or a new institution like ours. Even in a new institution like ours, every 5 years, and we got into the third phase of our life cycle, so we are only about 11 years old, So we just stepped in on April this year into the third phase of our life cycle. And we believe that every phase must have a new vision, a new strategy, and a new actualization game plan. The vision is very easy. We all know. You can say you want to be the finest quality bank of the world in India, like, was positioned, and we really believe we can do it. I'll come back to that. That we can be having a very coherent home country, as in a domestic India strategy, which is not very difficult to conceptualize. But most importantly is the actualization. Our country needs more and more practitioners, more and more execution-driven people, like Mr. Hota presented his. It's all about a good idea which becomes a great implementation plan, right? So something like that, I'm leaning towards the same angle. So visualize, strategize, and actualize. In the actualization, I realized one thing, because I've been like a compulsive banker, action-oriented, relationships, networking, products, risk management. But I tell you, foremost, number one is human capital management. Wherever you people are and your leaders in your respective organizations, that how do we create a very homogeneous HR culture? Because we are such a heterogeneous country, right? Fortunately, we only have one regulator. That's the good news. And only one compliance environment. Many countries have interstate compliance environments, including very complicated regulations, even in the great United States. But fortunately, we are blessed. We have one compliance regulatory environment. But I personally like to believe that one of the most important issues is the consistency, the perspective of our HR. If we can build very homogeneous, and I use these words for a specific reason, being present in a very complex country of 29 states and 7 union territories, that how do we build homogeneity? The airline companies can do it, whether it's Jet Airways and nowadays Indigo and all. They build consistency of service, quality, relationship management, networking management, risk management. Also in their business, they have risk management, right? They can build it, but we are much larger organizations in banking. So we have to think like that. How can we build those very in-depth HR capabilities, which are like very, very, significant in terms of the culture of the institution, in terms of the risk management of the organization. And to me, this is about the most important point in a high service organization like banking. We have to, therefore, existing banks who have, let's say, legacy issues, or moving forward, young banks like ours have one common platform. We have to focus, believe you me, day and night on HR. If somebody asks me in this young bank that what is my responsibility as the CEO of the bank, I promise you, I'm not exaggerating, it is 50% to 50.1% minimum HR management. Because we think we know banking, we think we know the external environment, macro and so on and so forth, but the way we build our frameworks, HR is not just about, motivation and evangelism. And not only about schools of banking and training. It's about how you build the frameworks today, how you build the agility. Like in our bank, we had the opportunity, because it was like greenfield, brand new, that we said day one, other than retail businesses, every other business should not have more than 4 layers. So the agility, institutional, action comes from the layering of the organizations. The more layers you create, sometimes just to make happy people, promotion here and there, which is not nice. You give people money, they're better off. But we should not give them just layers and layers of promotions for them to believe that this is like a big thing which has happened in their lives, because monetary benefits sometimes offset, these artificial promotions. Because once they layer, they create politics in an institution. I would humbly request that the frameworks be very, very agile, And that really helps. In retail, you probably need to add one more layer, as we have. So we have a fifth layer in our retail banking businesses, which out of our 11,600 people today is about 8,500 people. So we have one more additional layer because that's general management. As we work towards, in my opinion, and this is also HR related point, existing and new organizations have to redefine the culture. There's an article today also, coincidentally in the paper today, as to how we build culture in organizations. The brand is number one. Please remember, the brand is like the figment, it's like the top of the pyramid, right? The board is naturally reflecting the brand as well. The management, chairman, CEO, everybody is reflecting the brand. But the management has to live the brand. So if your brand is to do a certain kind of financing in a certain region, then you build your expertise in that region. If you're a pan-India brand, or if you're, like we aspire to be, a knowledge banking institution, then we have to build the brand in segments. So today, HR has to be, in my judgment, in banking, very diagnostic as in good, like money doctors. It has to be very prescriptive. That means solution driven. Because nobody wants to meet a banker who says no, right? They love to meet a banker who says yes, right? But to say yes is not an easy judgment, right? It's not a judgment call just for the heck of it. You have to be diagnostic, you have to be prescriptive, you have to monitor before you come to a decision which is going to make credit sense, which is going to make sense on the risk metrics of the bank. So what we have tried to do as a young organization, we are still the youngest bank alphabetically and otherwise in the country, that we have tried to create entrepreneurship. That in HR frameworks, I realized even in the big public sector banks, and amazingly for one or two of the large foreign banks I used to work for many years ago, I learned a lot, but they also had many gaps, that they get into vertical management. Good people need to be into horizontal frameworks. Very important part of HR, I promise you. In institutional building, it's like a house. When you build a home, right, you have plumbing lines. Plumbing lines, if you build them vertically, they don't work. But they have to go through all the ups and downs of the home, the building. So horizontal networks, lateral networks are very important to synergize the institution, to build the institution into like a strong organization. Vertical management for mature organizations works, but for dynamic organizations which are going through like growth phases, it does not work, I promise you. Because B2B, we hear this in the e-commerce world, the B2B and the B2C happens only if the bank and the frameworks and the businesses are laterally connected. I've been through the lateral organizations in my career of 35 plus years, and I've been through a vertical thing, which is when I left foreign banking, I said I didn't like it because the vertical management did not make sense to me. And then in building two institutions, as I have in the last 17 odd years, I realized the horizontal connectivity really works. Because you build the synergies, you build the internal connectivity. In banking parlance, it's called cross-sell, client relationship management, as far as the external relationship management is concerned. Because every product sale, if it's done differently by a different team, has that much more pain. But the moment you synergize the relationship, product and risk management, you build the efficacy to be able to do it like comprehensively. This is very important because in Indian banking, this is like very defective. Indian banking, I hate to say that, is very monoline. You lend, and you don't worry about all the other businesses. So why should not corporate bankers be selling retail banking? Why should retail bankers not be promoting cash management and trade finance and salary accounts and payroll accounts? Right? To me, it is the most important tectonic shift required in Indian banking is the ability of our HR to be evangelized, to be like, literally doctored into thinking that we can build banks and we can make big contribution to our institutions by thinking about these issues. Second point that I realized in institution building, last 12 years or so in Yes Bank, because Yes Bank has been like literally still a baby. We declared our first quarter results and I came straight from the board meeting, had a late lunch with my board members, sir. The best part about the bank is that the 3 C's. The 3 C's I've seen in the infancy of a bank which is only, practically speaking, only 11.5 years old. In 11.5 years old, what I like to really share with you is when sometimes motivation drips and what makes a difference. Leader or leaders must always communicate, sometimes over communicate. So we're discussing, sir, Mr. Gopala Krishna, sir, your subject, sir, which you guided me to speak on, change management. Change management means communicate, but communicate with confidence and conviction and delivery. We started the bank with super confidence. 6 months, 9 months, IPO, it was beautiful start. Sometimes people call it honeymoon start. And then the Bear Stearns crisis happened in 2008 and Lehman, so precipitation of global markets started happening. And then all of a sudden I sit with my 4-5 key leaders and I say, listen, why are we facing the wrath? Because we are only Indian bank. We're only in Bombay, in Delhi, in Chennai, in Hyderabad. We were present that time only in 8-10 cities. We only had about 70-80 branches. And yet we were facing the onslaught of the global crisis. Being a pure domestic bank, no international exposure, no reason to be in global trouble. How do you build confidence in these circumstances, yet being publicly listed? So we said, maybe there's an opportunity for a bank like ours. So we defined a policy, a strategy called, was fairly routine, opportunity in adversity. In October of 2008, I remember vividly, we went into that strategy because strategies are not constant. In change management, any strategy, please remember, there's no strategy that works which is constant. It has to be dynamic. So we outlined a strategy called opportunities in adversity. And all of a sudden we realized that there are good things happening as well, quantitative easing, fiscal dispensation, so on and so forth, certain sectoral, foreign banks are compressing, certain things are regressing, so there's an opportunity to capture market share. So opportunity in adversity. And certain sectors, please remember, even in a crisis, last 3.5, 4 years for India and globally, since almost April of 2008, so 7 years and 1 quarter. I measured it in quarters, so allow me. That the opportunity in India has been like also navigating. Some sectors have been very insulated. Healthcare has been insulated. Life sciences have been insulated. Even renewable energy has come as a literally a attractive opportunity in our sector. Even sectors like, I won't say FMCG because banks don't make money on that sector, they make it on cash management, etc. 7-8 transportation, logistics for example, e-commerce and their delivery system, not so much lending to e-commerce, but their delivery as in the logistics, they come as new opportunities. So banks also must navigate their strategies. To me, that is also a very important part of how you communicate a strategy, how you build the confidence, how you build the conviction amongst your team. So change management to me, apart from HR management, requires communication, sir, most of all internally. Internal communication, I realize, is far more important than external communication, because if there is internal confidence, then steadily, naturally it will migrate into external confidence. Most CEOs, most leaders think it's about PR, we appoint half a dozen agencies, the stock market, this. It's not that. It's about having total conviction, total confidence in leadership in our own institutions, which must have deep belief that what we are doing on risk management, on growth management, on opportunities and adversity. So when we move, sir, from this shift from opportunities and adversity, then we all thought we had a safe landing, a soft landing. Then we said, yeah, we must have a different terminology. So we changed the tap. We said terminology maybe now means carpe diem, seize the opportunity. Because we realized that there are certain segments of banking which were compressing for compliance reasons worldwide, and certain institutions in our own country, they were like, naturally for whatever reasons. So it must be, strategies need to be like proactive. They are not defined for 10 years. They, as I mentioned, they need to be like proactive. So the communication, I realize conviction driven and confidence driven communication really makes a very big difference. Like for example, illustratively I'm saying, and I'm not here only for marketing Yes Bank, that the first 6 years when we built Yes Bank between 2004 physically, because 2-3 years we did a lot of hard work in terms of process systems. And then when we set up the bank, we had no clue what we were doing. I promise you, Mr. Gopalakrishnan Saab also, I used to tell him, sir, we are working hard, please leave it to destiny. But when we came into April 2010, we said, listen, we already like 27,000 crores total assets. This phase needs to be organized. It cannot be done. In the first phase, we were about gut entrepreneurship. So change management, I'm sharing the change management experiences, how a young bank can go through it, and slightly elderly banks who are going through like metamorphosis can also imbibe some of this. So the point being, when we said, what is this phase going to be called? Version 2. But there was no version 1. The version 1 was all gut entrepreneurship. So we said we must have quantitative objectives, we must have qualitative objectives, and willy-nilly 5-10% we were behind because it was a very difficult period, 2010, 2015. So we were about 8-10% behind our quantitative objectives, but in qualitative objectives we were ahead. So it can be done. Because the qualitative objectives create, in my opinion, and which is my third point, mindset of our people. That's the third people. Because unless we leaders, because there are leaders in this room, unless we build mindset of our people, positive mindset, high confidence, high conviction mindset, and the mindset translates into slowly mind share. And there's an angle to this, there's this sequence to this. Mind share means if the internal teams have total confidence, here, listen, if I'm X bank, I'm Y bank, or fortunately Y bank, that we will get market share in these sectors. If they have so much, let's say commitment to that sector, believe you me, the mindset and translates into mind share. And that translates into market share. Now, change management, because there's a lot of psychology. This is not about a quantitative business, it's about like good management, right? Change management, sir, is good management. What do you do in phase 1? Human capital. How do you organize the confidence and conviction so that every bad cycle does not create any blip in your institutional confidence? So the owner, manager, partner philosophy, entrepreneurship, very important to create entrepreneurship in banking. Banking is a very entrepreneurial business. At the end of the day, it is the basket of the economy, right? So whether we are public or private sector, it has to be manifested like that. Every component of a bank's basket, of a bank's balance sheet is entrepreneurship. And good bankers will solve better problems if they are good entrepreneurs. If they are universal bankers, which I don't know what that means also, if they are general bankers, they will never be able to solve problems unless they are specialized. And I learned this, I'm telling you, when I was literally a student and many years ago, that we must in our country, because there are segmentation shifts. Segmentation means industry. And within industry, large, extra large, medium, small, extra small. So there's so many segments in every industry. So segmentation is a hugely important issue. Then if you see geographic spread, geographies are very different in our country because of heterogeneity in our country. So risk management is also very geographical. You'll find cement performing very well in a certain part of the country and behaving like with a little stress in other parts of the country. It's the easiest example to give. In a continent like India, in banking, we need that versatility. We have to have the MIS systems, the geographic stress management systems to understand. The easiest industry is real estate. It's behaving very badly everywhere, right? Right? But many other industries behave in a very particular manner. Like Bangalore, real estate is very good, right? Residential is doing well, commercial is doing well, SEZs are doing very well, IT SEZs are doing very well. There's growth happening, there's entrepreneurship transformation happening. Now that is a different risk from the risk of real estate in Bombay and Delhi today. Now, we have to analyze risk also like that. So this is what I meant by saying that mindset builds mind share, and mind share eventually in our business of banking builds market share. I'm super confident as a young bank that we will be a good mind share player as well. Because tactics in India have changed very dramatically. Change management means the CEOs also have to change, apart from putting on weight like I have, like many of us. The fact of the matter is that we have to think that how is the country changing and how can we be ahead of the change. I find a lot of bankers, with due respect, in our own country, they remain standardized. Fortunately, they're not restructured. Now, standardized bankers must get out of that comfort zone and take the bull by the horns and understand the risk management tactics. Because, sir, this is my very important point I'd like to share with you. With Government of India, I'm still struggling to convince them, but I'm trying. I never give up. That the most important thing with the fulcrum of banking, a fulcrum of businesses, is risk management. The risk management architecture, and this is where I think I'll request Chairman CAFRAL, and I will support him wherever he wants me, to spend maximum time is on risk management architecture of public and private sector banks. We think foreign banks are like hunky-dory, due respect, some of them yes, not most of them. Private banks, a couple of them yes, not most of them. In public sector banks, right now there is a herd mentality, unfortunately so. There may be some good traits also. How do we address that? How do you create? It's not only a risk approval mechanism. It's what happens day to day. I've done it in my bank in 11 and a half years, sir. Sir, in 11 and a half years, I've done it in my bank, but my 11 and a half years also has a preceding experience of 30 years, and my teams have experience of tens of years also, right? The way we have done it, that every industry we are like literally monitoring. I'm sorry to say, and we have to monitor literally like doctors. The health condition of an industry, and within the industry, there are different patients. There are large patients, the medium patients, the small patients. So we have to analyze every industry in segments. And we must have risk architecture. I'll give you the best risk framework. So most, McKinsey will charge you 500 million, whatever dollars. I will give you a risk management framework for my country because I profess my country. Right? My country is my country. So I have built my business intelligence and risk intelligence in my country. Where we can be torchbearers of something going wrong well in advance. Now that has to have a high premium, right? If Mr. Hota sets up something in payments and he says, yeah, Yes Bank is a good pilot for it. We want to be a pilot, and that pilot becomes the number one success in his frugal innovation payments. That means we've done something together well. Sir, I would like to request you, in risk management, please use my bank as a platform for what we have done, and we are not so small anymore. We are like the smallest large bank in the private sector, at 1,42,000 crores of assets, total assets, declared this afternoon. My results were there, and I came straight from there, from the board meetings yesterday and today, sir. The fact is that it can be done. So mindset, mind share into building market share means that there has to be a risk management architecture that has to perform. In banking, that is like extremely important. We take it for granted, thinking a committee will approve. So committee is decided and then it's like a done decision. I'm sorry to say that the committee is only a decision-making authority, that the framework below that is the most important before it goes to approval, and most of all, after approval. After approval, we have no mechanisms in our public sector banks, and I would like to believe in a couple of private sector banks as well, where it can be improved into realizing there's proactivity, there's red flagging, there are credit administration departments, they're monitoring covenants, how covenants are managed, tickler system, maturity system. This is risk architecture. You don't have to go to McKinsey, you don't have to go to any leading organization. Yes Bank has it. I want to give it free to my system. And sir, 7 years and 1 quarter since April of 2008, today in my results I've displayed the chart, we demonstrated in the same market. It's not that we don't have problems, we also have problems. And problems don't go away. But point is how quickly you reach out to mitigating the problems. So the curve chart, the trend chart is pretty much there. I think I've exceeded my time. And I wanted to only talk about change management. Such change management is also about financial inclusion. It's about thinking about digitization, right? But the IoT, the Internet of Things, and it's about the convergence and building frugality in our payment systems and our reporting systems and creating very terse payment technologies. Because payment technologies also need, in a way, a credit card system. We also need a payment card system. And India has a lot of resistance to a credit card system. So we think e-commerce boom is here. But e-commerce boom is not so easy in India because the credit card system in itself has a lot of resistance, that you may order something on grocery, you may order something on these fancy but the payment will not come. The big issue right now in all these people, they're not telling you because they're raising money like hell. But they're not telling you that they order something but they don't get the payment. Because the credit card is not performing, and when you deliver the goods, they decline the order. So cash on delivery, we have to solve that also. If somebody orders 300 rupees, 500 rupees, the messenger or the courier who goes there is almost as expensive. So how do you create, with Mr. Hota's help, how do you create a frugal payment system? Because only Mr. Hota through NPCIL can create that frugal payment system. Because it should not be a credit card cost. It should be literally a pass-through cost. So we have to think like that, because e-commerce can do wonders to our country, right? But we have to create the frugal, payment system. So digitization, whether it's called digital banking, these are phenomena which have arrived. So I don't want to really, because you know this already, but the fact is IoT is going to make a very big difference. Centralization, like I've taken 4 lakh square feet in Chennai. When I told my management team that, yeah, listen, I want your advice on this. They said, boss, why so much? I said, listen, this is going to be the lowest cost HR center of any bank in the whole country. So I said, lowest cost HR center of the whole. Why say HR? No, people say that, it's back office, BPO and all that. So I've taken number 2 in Chennai, 4 lakh square feet, where I have 5,400 to about 6,000 people seated. that can process all my transactions nationwide. Our ambition is only to be a home country bank. We'll have 2-3 other branches here and there, but only to cater to India, 29 states and 7 union territories. But sir, it gives us such a fantastic competitive advantage if we think the systems. Because today, change management, sir, also warrants not because we think productivity is only employee productivity. So we say employee revenue to employee, is the most important thing in India, in banking, sir, most important thing. And we are trying to do it because startup bank has a slight advantage despite like late start, is process productivity. I would humbly request some of you, who represent your leading organizations, please, employee productivity should be managed by finance and HR. Process productivity is hugely important. And it's not just about nice terms like Sigma 6 and black belts here and there. The highest productivity gains in the world, this is a study, I'm not done, I've read the study, are achievable in India. Process productivity gains, not only in banking. I read a study recently that almost in 19 out of 20 industries in India, the maximum process productivity gains are possible in India. Process productivity. Far more or as important as employee productivity. So that to me is change management. Our thinking has to revolve around that. Right? So it's a very beautiful business to be in, banking. But banking is the representation of, as a barometer of the Indian economy. Hopefully the Indian economy is upticking. And we have great leaders, Mr. Gopalakrishnan, Mr. Hota, many others here. Thank you, sir, for this valuable opportunity. And I've shared my thoughts, and I want to be more part of CAFRAL because banking is my bread and butter. Thank you, sir. Of course, of course. Board meeting is over.
Yeah, you are, of course, you are not only a banker now, you are also a leader of the ASSOCHAM as a chairman. See, the new government, to be fair, in 1 year they have done good work. For example, insurance, GST is almost happening. Many of the, particularly FDI, FII clarity is there today. A lot of FDI is coming to country. So despite this, what is that is preventing us from further growth? As leader, you must be interacting with the government. So what is that banks are hoping to get? Particularly the public sector banks are still finding that things are not happening at ground level. This is the common complaint when you talk to some of the public sector banks. At ground level, nothing is happening. But at policy level, all clarity has come. And with less than 1 year, many things have been resolved, which was pending for 5 years or so.
So, sir, as you articulated so well, that the government has come with naturally a sense of high confidence, high conviction, but because of whatever are the inheritance issues, they're moving with deliberation, very, very measured deliberation. And in that deliberation, naturally, there are plus and minus points. That if you put money like quantums and quantums of capital into public sector banks, which is generally expected and as media reports, the question mark is, has the architecture improved? Has the change management happened? Has the ethical management, which your invitation letter articulates extremely well, sir, has that happened? Has the board governance become intact? Has the technology shift happening? Is there enough understanding of the rationalization of non-core assets required? Is there enough depth in the CEO? So today a CEO only HR is not enough. He has to understand technology. In public sector banks, sir, I admire them. There's very many good friends there. But they have to understand technology. It cannot be delegated. A board has to discuss technology today, next only to risk management. Right, sir? So, sir, unless there is so much improvement in the overall governance of the banking sector, and I'm not saying, sorry, it's not Air India's and Jet Airways kind of example, but my example is very simple, that the public sector banks they're very rich in assets. Why do you need 10,000 square feet branches? Every branch should be measured today to decide what is the footfall, can we rationalize the asset, every branch. How many people in the branch? How many smart branches? It's like what we call nowadays, the IT people teach us how to refresh. Some people say it's refreshment. Some people also call it benchmarking. So change management also warrants, sir, because that's the subject you asked me to speak on. It's refreshment. It's about benchmarking. So we have to. Sir, I sit with Mr. Azim Premji, who's my #1 vendor. He comes and has strawberry shake, McDonald's and all. He sometimes, and he comes once a year to my bank. He says, because you are the pilot bank, because your bank is full of the maximum ideas in the world. More than Silicon Valley, because the big banks are so big that, they're all like fractured. Our bank is still enough to converge on the energy, right? So, sir, issues are very simple. Banks today, if you think the government dispensation is only more capital and capital and capital, which in any case is doctor's orders #1. That's the easy one. But the fact is, the patient must be vigorous. The patient must be into health, into good health, and saying that I deserve only energy, I don't deserve an ICU shot. So there's a difference between a patient and ICU, and a difference between a patient who's saying, I'm willing to walk and run and go for the marathon. So, sir, I think this analogy, if I can share, I think the public sector banks have to gain confidence, they have to gain conviction. They're very good networks, very good client base, deep CASA, you can't go wrong with that, but they have to get frugal. They have to rationalize their public sector. I can do it in 6 months and 12 months. But I'm not the promoter of public sector banks. It's very easy to do. It's the easiest action to take. You give them, because the good thing is that 29 of them, including the subsidiaries of State Bank, 27 of the State Bank of India subsidiary, so you give them one prescription, they have to follow. It's easy. If you tell them, and I've given FM, I've given everybody the prescription. I said, my prescriptions are not consultancy, they're free of cost. It's what I have done to build an agile bank called Yes Bank. Well, naturally with fantastic people who are owner, manager, partners in a young bank called Yes Bank. But Yes Bank is an Indian bank, it's not a foreign bank. It's a bank which goes to Arunachal Pradesh and doesn't want to go to America. We want to be in Andaman, not in America. We want to be in Maldives, as in Lakshadweep, in the Union territories, right? That is our model, because the Indian returns, Indian attractiveness of the market is so beautiful, right? It's a homogeneous market. So my large point is, yes, public sector banks are compellingly fantastic stories. But they need to go through a prescription list, 9-10 points, and they must help themselves also and demonstrate to Ministry of Finance that 1, 2, 3, 4, our boards are doing this, we are doing it proactively, we are rationalizing everything. And I'm willing to come, if you allow me, sir, along with you. That will be very nice action step from CAFRAL meeting. If you allow me 1 hour, Mr. Gopala Krishna and Rana Kapoor go together with some other leaders and talk to the boards of each of these banks. Call it CSR, call it just knowledge sharing, call it just relationship building. We'll do it together. We can do it in the next 2-3 months as an action step on change management. Because our banks need to help themselves before the capital shorts come. The capital shorts are easy, sir. One good high tide, you get the capital.
Sir, I have questions. Sir, it was privilege listening to you, sir.
Sir.
One question, sir. As industry thought leader, what are your suggestions that you are pursuing with Finance Minister
and with governor. Can you share some of the big ideas that you are pursuing with both of them?
Sir, with the governor, as far as I'm concerned, Mr. Gopalakrishnan is my governor. You know why? Because this is only as much as I can share. But in terms of, sir, the finance ministry, so much can be done. Banking alone, sir. Good thing, non-executive chair and MD CEO, good move. Non-core assets being sold, technology factories being set up in terms of central processing. We don't need, sir, I've proven, I have no processing center other than 2 processing center which I'm consolidating further in Chennai. I don't need it. It's the TAT. Everybody knows TAT, right? Everybody knows quality assurance. It is better done, courier service, everything is like one day instant transaction. And then through, you know, whatever laser movement today, you know, you can do transactions that turn around like within minutes. So why build processing, central processing hub? So there are 10 ideas I've given to the finance minister. I met him like half a dozen times in my SHM capacity, as Yes Bank capacity. And they have to understand that this is a shift which is mandatory for public sector banks to get more and more efficient. And then I spoke about mindsets. Public sector banks have to help themselves on HR management. This is nothing to do with government of India. If the evangelism is proper, because today a banker in public sector, because I admire public sector, banks, they have to understand that a single banker must sell 6 products. Only one example I'll give, because you know, I don't want to say something which is not like cannot be executed. Mr. Gopalakrishnan told me, any idea should be executable. So, simple idea, 1-page profile I'll give you of a bank which is worse than a public sector bank in America called Wells Fargo Bank, which is today the #1 market cap in the bank. ICBC and has just become #2. #1 market cap bank in the world. Reason? Effectiveness, efficiency, and most of all, client relationship management system, CRM systems. That a corporate relationship should also sell retail. A retail relationship should also cascade the individual relationship to his employer and employer's employer. That is the CRM power. We must sell, for banking to be an efficient business, 5 to 6 products. Amazingly, Wells Fargo has a ratio of 8 to 9 products to every client segmentation. Retail, SME, micro SME, small, medium, large, venture capital, everybody included. The entire relationship segmentation they have. They sell 6, 7 products. So we must, and it's not about e-wallet only, we must sell a lot of product to our clients so that the economies of scale, the efficiency of scale in relationship management is happening. And the moment it happens, those clients are captive to you. That means the business becomes like an annuity business. With due respect, most of public sector banks are selling only 1 or 2 products, mostly loans. It's proven in banking that a loan lending institution is a value destroyer. But when the loan is accompanied by trade management, cash management, FX management, payroll management, it is driven by CAPEX management, term loan management. So you do those 9, 10, 12 products, it becomes a very lucrative customer. It doesn't go to you and it has less risk problems. There are less risk problems also. The moment you have a monoline product, you don't control the risk in the product. I think.
Thank you.